Join your host, Maddie Roche, as she brings you into a community of fee-only financial advisors who are successfully building profitable businesses that serve the next generation of clients. Learn from innovative advisors whose unique stories will inspire you to dream big and take action on your goals. Are you ready to live your best life and help your clients live theirs? Then you're in the right place.
Hello, and welcome to this episode of XYPN Radio. I'm Maddie Roche, your host. I'm excited to have XYPN teammate Dan Keslin on the show with me today. Dan is the team manager of FA Bean Counters, XYPN's outsourced accounting and bookkeeping services. And he joins us today to shine light on the responsibilities of the RIA owner when it comes to keeping books and financial records accurate and updated, a task that many advisors underestimate when starting out. As Dan explains, not only are accurate books and records a compliance requirement, but many firms need evidence of a financial statement, and many require net worth requirements just to get registered. Dan talks about how a deep understanding of your accounting allows you to make strategic decisions about your firm, compare yourself to other benchmarks, seek credit, and even know when it's the right time to hire. Although most folks know what reconciling books and creating a chart of accounts means, for those of us who don't, Dan walks us through those terms. And he also gives his perspective on what FABC can offer advisors and what to take into consideration when looking to outsource aspects of your business, specifically around this space. If you're interested in what it's like to balance your own books or outsource it to the pros, then this show is for you. Avocado toast, selfies, a mountain of student loan debt. Gen Y is anything but traditional, and with over 75 million people, it's a population you don't want to ignore. Learn more about how to serve this unique population in our guide called Attract and Profitably Serve Millennial Clients in Your RIA. Discover 3 key ways to tap into the millennial market and 6 things that they want from their financial advisor. Visit xyplanningnetwork.com/millennials for your free copy. You can find any of the resources we mentioned during the episode at xyplanningnetwork.com/282. Also, be sure to go to xyplanningnetwork.com/VIP to join our private group just for XYPN radio listeners. It's a community of advisors we've all been looking for that's there to provide support when we need it the most. Best of all, it's free. I encourage you to check it out. Again, that's xyplanningnetwork.com/VIP. Without further ado, here's my interview with Dan. Welcome to XYPN Radio, Dan. How are you?
I am doing well, Maddie. How are you doing today?
I'm doing great. I'm so looking forward to chatting with you this hour. You have so much good information to share with the XYPN radio listeners, and I'm excited to dive in. But before we do, Dan, just paint a little bit of a picture of who Dan Keslin is.
Yeah, thanks, Maddie. So my name's Dan Keslin. I grew up in New Hampshire and moved to Montana for college, really to pursue a career in skiing, I guess you could call it that. But in college, I studied accounting and business and really enjoyed understanding business, understanding strategies. And that sort of led me to a career in accounting. I enjoyed doing anything in accounting, really looking into accounting as a whole and what that can do for your business and how it can really help you better understand your business.
Awesome. So what does that mean for your current role? What do you currently do at the XYPN team?
So at XYPN Network, I am the team manager of FA Bean Counters. And FA Bean Counters, as you all are probably aware of, is an outsourced bookkeeping and accounting system or option for advisors, financial advisors. I manage a team of 5 different bookkeepers now. So any issues that come up with that team, as well as handling any questions they have, upper level accounting problems, is something that I help them out with, managing those team meetings as well. Aside from that, doing business development, practice management for FA Bean Counters. So that's sales calls, signing people up, making sure all the payments can go through and the engagements are tracked appropriately. Aside from that, workflow management, just making sure that no one is too overloaded on our team. No one doesn't have enough work, just so that they're able to deliver the bookkeeping sort of deliverables on a deadline and make sure that all the reporting is done on a timely basis.
So you keep the ship moving forward, it sounds like.
Trying to keep the ship moving, yeah.
Absolutely. I understand as a fellow manager that a lot of your time as a manager is spent managing and not necessarily doing, which which wasn't always the case, Dan. I guess talk to us a little bit about how you became the manager of this department.
Yeah, it's been a bit of a transition. Like becoming a manager has been hard to feel like I used to just crank out a bunch of books. I would do 60 sets of books and like you could clearly see what you get done in a day. You could see how much you get done. But it's a little different transitioning into a management position where like you are getting all these things done, but it's just not the things that you typically see on like checking off tasks off the list or checking off things on your to-do list. But at FABC, I started out as a bookkeeper. I had moved away from Bozeman for a little bit, and I came back and was skiing with some friends and went to a brewery after skiing and ran into Haley Stewart, who was the director of FAB Encounters, I believe, up until recently. But she told me that they were hiring and looking for new bookkeepers to join the team. And we went to college together at Montana State, both in the accounting program. And that sort of budded a new working relationship. I went and met with the director of operations, or the COO at the time, and Alan that next day while I was in town, and had a very informal interview. I was kind of concerned because I didn't have like a button down shirt or like fancy pants to wear, but it was great to see that the company culture was very relaxed. And from there, I kind of just, I got really good at doing accounting and bookkeeping. I helped advisors understand their books better. I was able to take on some more of the complex clients with higher level accounting problems. And really from there was figuring out the relationship between bookkeeping and compliance and what that means to really focus on this niche of financial advisors. Like, why is compliance and why is bookkeeping such an important part of their business, and how do those sort of intermingle? From there, I just kept relaying to the executive team and talking with others at the company about my experience running business and expressing the desire to manage a team and make strategic decisions for the business. So that kind of led me to the path in moving toward the management track rather than this technical sort of expert track. I think that's kind of how we came to be where we are now.
Awesome. And as someone who works with advisors, I'm still, kind of putting together, what does it actually mean to do accounting for an RIA, and what kind of responsibilities do different advisors have for their businesses? We'll get into that, but I guess just tell us a little bit about FABC and what services you offer to state registered RIAs.
Yeah, so FABC offers services not only state registered RIAs, but those that are regulated at the SEC level. So we can do bookkeeping and accounting for those RIAs. The services that FABC really offers, though, is the monthly bookkeeping. That's where you completely offboard and outsource that accounting function to our team. We go in and do all the categorizations of those transactions. We put, and what that really means is moving all the transactions that come through your bank account. So you have your checking account, your credit card account, your sundry account, typically. And those connect to QuickBooks, with the exception of the sundry account. That one does not. But we categorize all those transactions to the accounts on the appropriate chart of accounts. What that means is we're moving, say, an expense to XYPN for your monthly dues to dues and memberships account. We're moving your mid-month dues to Right Capital or whatever other tech stack you use to the technology and software account, or if you're using eMoney marketing to a marketing account. So we categorize all those appropriately. And what that really does is it paints a picture of your finances. So it puts things in the appropriate buckets to be able to have a profit and loss statement. From there, we're making sure that all the balances on the balance sheet are accurate. And how that's done is through a reconciliation. Reconciliations look at the bank balance as of a given date, sort of like the end of the month balance showing up in your account. It looks at the bank statement, and it looks at those transactions that we have categorized. A lot of times the reconciliations are very straightforward, like there's no issues. It sort of checks out. There's no discrepancies. It balances out. But sometimes there are issues that pop up, like a check is written and it hasn't cleared the bank account yet. Like you've written a check to a vendor and they haven't cashed it yet. So that could throw the balance off, and you sort of have to understand why that is and really look into it to understand what's going on. Like sometimes the balance will be showing up incorrectly and you don't understand why. You can look back at that reconciliation and realize that a check hasn't cleared that account, and therefore you'll have a better understanding of why the balance sheet balance does not exactly match the bank statement as of a given date.
Wow, that's a lot, Dan. And I say that only because I also know kind of the competing other priorities advisors have as they build businesses. The idea of doing just this feels like a full-time job. I guess, could you just paint a picture of what are the accounting responsibilities of an advisor going into this? If we're talking directly to folks maybe who do not have firms yet, what's a short answer to kind of what do you need to know and expect in terms of responsibilities for this role?
Yeah, well, there's a lot to really think about there. And you think about like the bigger picture items, like you need to have your chief compliance officer, you need to be operating under what your state says that you need to do as far as your regulatory environment that you operate in. You have to have you have to meet your net worth requirement, for example, in California. So that's obviously something that's dictated by the regulatory board. But how do you know what you are at there? Like, how do you look at that if you don't have books? So that's where sort of the back end operations come in, and making sure your books are ready to go, making sure you have your accounting done. So if you need to be able to show your regulator that you have your net worth requirement and you're filling out that report at the end of the year to show them that you have your net worth requirement, that's where the accounting really comes into play. It's really, as part of your responsibility to be able to fill that out, you have to have your accounting done. You have to have your books and records ready to go. The other side of things as an advisor is pretty much every state, I don't know if I've seen one that doesn't say this, but pretty much every state says that you need to maintain accurate books and records. Part of that is your bookkeeping. Really, that books and records comes from all the transactions that go through your bank account that you use in operating your business. Those books and records, or those transactions that come through, you categorize by doing the bookkeeping to prepare your financial statements. That really gives you those reports that you're going to be using. At any point in time, that regulator could decide to audit you. You need to be able to provide them with financial statements. Sometimes they give you 5 days, sometimes they give you 3, sometimes they give you 30. You never know what you're going to get, and each regulator is different, I believe. So, that's kind of why you want to make sure you have everything ready to go. You're staying on top of your accounting. You're not letting it get delayed.
Wow. Yeah, absolutely. I would feel like no advisor would want to run a business without accurate books and records. Do you see a lot of advisors being behind the curve with this?
We don't see it a whole lot, but of course there are advisors that come to us who are under an audit and realize that they've gotten behind. They don't have their books done accurately, and their auditors requested them to provide revised financials. They kind of come to us and say, hey, I don't really have the time to do this because this audit is literally making me shut my business down while I prepare all these things that the auditor needs to be able to move forward and run my business, to make sure I don't get a deficiency notice, and make sure they don't suspend my operations. So we do see it pretty often, but for the most part, those that are running their business well and those that are staying on top of things maintain their books. There's just a point in time where their time is better spent doing other things. And those that do not do their books, they come to us and we have to do a couple of years of bookkeeping. And it really takes a lot of time to make sure that everything is up to date, make sure that everything is accurate, make sure that their tax returns that they filed in previous years are accurate as well. And then that also, you have to think about like the reports that they filed with their regulator. Is that accurate as well? Do we need to go back and amend those to make sure that everything is accurate and filed correctly with the regulator?
Wow, I didn't realize there was such a deep connection between books and records and the compliance responsibility of advisors. And I've always known that there's that to do to maintain accurate books and records and that financial statements are required. I didn't realize how deep some of these requirements are. Could you speak a little bit more about kind of the tie between compliance and bookkeeping and what you've seen from different states, knowing, of course, that you are not a compliance regulator or a compliance expert per se, but you've had certainly a lot of opportunity to learn kind of state by state what is required.
Yeah, definitely. I'm not a compliance expert by any means. We have those people on the team, luckily, for you all to reach out to. But specifically states, I talked a little bit about California, but there's other states that have minimum net worth requirements. And that's really, they're saying that you need to maintain an X amount of sort of net worth to be able to stay compliant or stay not deficient. California is one of them. Colorado is one of them. I believe Florida might have that as well as Texas. But those are just one of the sort of things that the states require of you, that you need to have your balance sheet to be able to tell if you are meeting that requirement. The other one is Washington. Washington, we found, is sort of difficult with what they are requiring from a bookkeeping and books and records standpoint. Not only are they requiring accrual books, they have a minimum net worth requirement of $10,000, but they also require for every invoice or every payment that you send a client, they're wanting to see the hours that you put into that. They don't really want to just see, hey, this is a retainer we've agreed on, whether or not I did work this month, here's an invoice for it. They want to know that you're actually doing work for that month for that client. So making sure that's tracked appropriately on the invoices, making sure that the recurring invoices have the data to back that up, and to be able to show the regulator that you are substantiating those invoices with actual work is a big part of compliance that is very closely tied to maintaining your books in QuickBooks or whatever system AdvicePay you use to notify those clients of their charges.
Wow. Thank you for that. I hear these terms used a lot. Hey, I need to reconcile my books. I need, to create a chart of accounts and categorize things. I guess, could you walk us through, just kind of generally speaking, what is a chart of accounts and why is it important?
Yeah, a chart of accounts is really the baseline of your financial reporting. So a chart of accounts, when you're setting up a QuickBooks account, you upload a chart of accounts, or QuickBooks does have their generic one that you can use. But the chart of accounts is pretty important because not only does it relate to how you run your business, but it can relate to how easily translatable your books are into your tax return. It can show you how you compare against others in the industry. If you use a templated chart of accounts that others use, you can compare and say, how much am I creating revenue in comparison to my marketing expense or my overhead expenses or my salary expenses? You can't really do that if you don't have a good chart of accounts that's sort of templated after others in the industry. At FA Bean Counters, we sort of have worked to develop a chart of accounts that we think is pretty good as far as going across the board with all businesses. Obviously, some businesses want to have more detail. They want to have less detail, or they work with a consultant that has a specific way they want to set up their chart of accounts for their analysis purposes. But we have what we believe to be a pretty good chart of accounts. So you can compare amongst others in your industry. You can look at the XYPN benchmarking survey and say, hey, as a percentage of my revenue, I spent $5,000 less than this other firm did on their marketing, but they grew twice as fast as I did this year. Maybe I should be spending more on marketing, or maybe I should be reaching out to the marketing coach at XYPN to help get more leads, to increase my deal funnel. And really, that chart of accounts is the baseline of that to make that happen. Because if you just had advertising, promotion, marketing, and meals and entertainment all in one category, you wouldn't really be able to get that detail that you need to see how much you spend on advertising versus marketing versus business development by bringing clients out to lunch type of thing.
Fascinating. Thanks for that explanation. And I'm wondering, what does it mean to reconcile? And how long does it take typically an advisor to do that?
Yeah, so reconciling is just looking at, we talked about it a little bit, but looking at the bank balance that's showing up on your bank statement and comparing that to the balance sheet, making sure that all the transactions going through that bank account are accounted for. Typically, that takes pretty minimal amount of time because the software allows you to do it relatively quickly. If you aren't using a software, though, it can take quite a bit of time because you have to go through that. I would recommend you probably go through that bank statement, print it out, and put a check mark with a pen next to every item that you see in your books or see in Excel. That's pretty time consuming. Where it really becomes time consuming, though, is if there are mistakes. If there's a missed transaction, say the bank feed failed for a day and it missed 3 transactions, or the bank feed had some lapse and it duplicated a bunch of transactions, you really have to understand what to look for and what could be causing those issues. Why is the balance actually off? What happened in the bank feed to cause that? So those are things that can take, if you don't know what you're looking for, it can take you hours to figure out. You'll be spending time on YouTube figuring out how to do a reconciliation. You'll be Googling, why doesn't my account balance match on reconciliation in QuickBooks? You may be able to figure it out. You may be able to look in the forums, but that time that you spend, it could end up being a couple of hours by the time you're done. Typically, a reconciliation that goes well, though, should take a minute or two at most.
Wow. Awesome. I'm starting to really understand kind of the benefits of either really dedicating, true time to this every month, or outsourcing it to experts. And I just didn't realize kind of the depth of which advisors really need to have a handle on what their expenses are. As someone who's really worked with a lot of business owners over these years in this capacity, what value do you see good bookkeeping bring to the advisor? And you've certainly touched on a lot, and I've already taken some takeaways from this, but just from your perspective, how does this benefit an advisor long-term?
Yeah, well, Maddie, I'm pretty partial to one of these, and it's for tax returns and tax reporting purposes. And I'm partial to that because I worked at a CPA firm for 4 years doing taxes. And the biggest gripe with all of us doing taxes was like when someone would bring in a box of receipts or like something on Excel that is like a handwritten summary of what they did for the year. It's not accurate. It's not like completely representative of what, or representing what their business did. So having a good chart of accounts and having good up-to-date data kept in a bookkeeping software really will allow you to have a cheaper tax return. Like if you bring that to a CPA, say, here's my profit and loss, here's my balance sheet for the entire year, that data is so easily attainable for them to just put into the tax software. Some bookkeeping softwares even like integrate directly into the tax software. If you want to do your own taxes and you're in QuickBooks, you can connect that to TurboTax. But imagine going through a bank statement to figure out what your total expenses are. That time that you're going to take at the end of the year when you could be working on your business development, or the time that the CPA is going to take to figure that out for you at $200, $250, $300 an hour, it's going to cost you a lot of money, where you probably could have gotten that done for maybe $100 a month, had financial statements every month for the entire year. When you go to your CPA, you have a better idea. Like you know you've made your quarterly estimated tax payments appropriately. You've been able to budget and figure out what your revenue is, what your tax liability maybe is, so that you're not going to have an underpayment of estimated tax penalty at the end of the year as well. So there's, as far as taxes go, it's the value is insurmountable. Like you need to have accurate books to be able to put that into a tax return. And it's not going to be worthwhile for your CPA or you or your time to just have to figure that out from receipts at the end of the year. Another one, aside from tax returns, though, is financing. Like when you go to buy a house or buy a car, they're going to ask you to see your W-2 if they want to see your prior year tax returns. And if you are a business owner, like whether or not you have a W-2, they're going to want to see your profit and loss statement. They want to see how much money your business generates and make sure that's sort of tied into what your tax return does. So you're going to have to be able to produce that in the event that you need to get financing. Like you need to send that Schedule C or send that profit and loss statement to the lender to make sure that you have everything lined up and ready to go. If you have sort of a last minute need for a loan and you need the loan to be able to operate your business for some random event, if you're going to be scrambling to put that data together, and you're going to kind of be losing out on other business and development opportunities for your business.
Fascinating, Dan. Anything else on that note? I know you could probably list off a whole bunch, but these are really fascinating points if you've got others.
Yeah, one of the other big ones we have is the benchmarking. Like many people want to know how their business stacks up against others. Like we talked a little bit about this already, but how do you know how much you're spending on marketing if you're not keeping track of it in your books and recording things correctly and appropriately? How do you compare amongst others in the industry? Like as if you're in a third year firm and you are sort of behind the curve, you'll at least be aware of that. And maybe you can make changes. Maybe you can realign your goals or set different initiatives to help meet those development goals of your business. Without having accurate books, I mean, you just can't do that. You'll be able to sort of look at and see at your credit card statement how much you spent each month on a recurring transaction for a tech stack, for example. But it will be really hard to see as a whole for that software and technology category, how much are you spending in comparison to others in your industry. The other thing is like peace of mind is a huge one for just having your books. Like if you have had a regulatory audit before, I think you will sort of understand and realize what the peace of mind brings in having accurate books and records. Like if your books are prepared exactly with how the state wants them to be, you've never had a deficiency notice before and they just want to see financial statements, you send them to them. You don't have any worries. You're not thinking like, oh man, what if they see this? Or what if this is done incorrectly? Did I do this correctly? It's just like a big peace of mind knowing that you're having someone who focuses on just this industry, preparing those financials for you and preparing those statements for you. In the event they come back and say, hey, we've noticed this is done a little differently, we want you to make changes, we can help you make those changes so you're not sitting there trying to figure it out and trying to do it on your own. We'll just be able to help you out and sort of hold your hand through that regulatory process as it comes to your financial statements.
Wow. No, I love so many of those points. And I think just kind of having an understanding of your business is really how could you know if you were doing well without this stuff and
right.
without a continued pulse on your finances?
Yeah, really understanding your business is another good one there too, Maddie. Your books paint a picture of the overall health of your business. It's much like tracking your personal health and nutrition. And if you're going to be tracking, if you're say on a weight loss program, for example, or a muscle like training program, for example, you're going to be looking at what you eat. You're going to be looking at your health. You're going to be looking at your nutrition, weighing yourself, counting your calories, those types of things. Bookkeeping tracks this for your business. It's going to tell you overall how your business is doing. Were you profitable this month? Were you not? I mean, it's very easy to see that when you have good, accurate books. Another thing is like goal setting. If you're a goal-oriented person, and there's nothing wrong with this if you're not, like if you're a lifestyle practice and just enjoy running this business and sort of taking it as it comes, happy with that, that's totally fine. There's nothing wrong with doing that. But many of you are goal-oriented and sort of have goals for meeting X amount of revenue levels by a certain date, and you want to hit certain profit margins, or you want to have like a 15% of net income to or gross income to net income ratio. You'll be spending a lot of time reviewing your reports and really digging in there and allowing yourself to have those reports available so that you can just go in and do that analysis, and knowing that the bookkeeping is done. You can do that every 15th of the month for the entire year. Just knowing it's done is pretty valuable.
Wow. Incredible. Thanks, Dan. Mm-hmm. I'm wondering, how do you recommend advisors track this on their own? Say they don't outsource. Is this something that you just recommend advisors carve out a certain number of hours every month to do, or is this a daily type activity? I guess paint the picture of what to expect if you were choosing not to outsource.
Yeah, the biggest thing is to just make sure it gets done. Whether if you're the person who likes to get in the books every week and you want to have a amount of time set aside each week, say 30 minutes on Friday afternoon to go in and do your books so you can look at weekly reporting, then yeah, that's going to work for you. But if you do it at least once a month or maybe once a quarter, if you don't have a whole lot of sort of random transactions going on, that will work as well. But monthly bookkeeping is what we do. It's what we recommend you do. That way there's no point in time where you are 2 to 3 months behind on what has happened. Your books are more up to date. And again, in the event of an auditor requests financial statements from you, you're going to have to get 3 months of work done in a matter of a couple of days. That's going to take away from your time spent working on your business and your time meeting with clients and developing the business that you've really set out to do on your own. I mean, you probably didn't set out to do this business to be able to maintain your books, but that is something that you need to do. On another hand, if you sort of like doing the bookkeeping and you have the time to do it, you want to do it on your own, there are some advantages to having some help really understanding what your business is doing. And we kind of recommend you hire a business consultant or work with like the executive business coach at XYPN Network or the financial planning and process coaches there. But they can help offer some insight into your business and really seeing like how you're doing in comparison to that benchmarking survey. They can help you develop some strategies to hit those revenue marks you want, to hit the target revenue levels and the growth goals that you have. And then having the books, like whether you're doing them or hiring someone out to do them or outsourcing that, having all that data is something that they will need to be able to see to be able to help you with those consulting type questions or those consulting level strategic problems that you're working on.
Yeah, it's never a bad idea. I mean, especially for folks who are building businesses, to consult other people on how to continue to do it better and better. There really are experts in these different areas. And anytime you're taking and spinning your wheels on things that you're not good at or you don't love, we always encourage you to go out and get expert advice around it. Dan, I'm interested in the software space. It feels like a lot of this is manual. A lot of this takes up a lot of folks' times. Is there a way to speed up this whole process in terms of, have we gotten to a point where some of this is automated?
Yeah, a lot of it can be automated, Maddie. And as far as needing software, yeah, we recommend you have software, whether that's if you feel good enough in Excel to save the $25 a month for QuickBooks, go for it. I mean, if it means you're going to do your books versus not, please do it in Excel versus not doing it. It's relatively hard to do it in Excel though, and we've talked about this quite a bit on the podcast already. Is QuickBooks Online is the system that we recommend you use, and really that's because it does double entry accounting. It keeps track of everything. You can set rules to automate things. You can set up recurring transactions to automatically send invoices to your clients at the end of each quarter, at the end of each month, or however you want that to show up. Aside from that, the QuickBooks can, as I mentioned, integrate with tax software. So you can link it to TurboTax to automatically pull your profit and loss statement into that Schedule C or into your S Corp return. As far as softwares though, yeah, I mean, software is going to save you a lot of time, but there is a cost associated with it. There are other softwares out there that we don't necessarily know a whole lot about because we haven't really, we've decided to become focused on one software so we know the insides and outs so that we know how to use it really well and that everyone is on the same software. Therefore, we can sort of have the expertise that we need to be able to understand that software and help you all with your bookkeeping. But QuickBooks is the one we recommend. Definitely recommend you schedule some time with myself or anyone on the team to really help figure out how you can automate some of that, like setting up banking rules. We wrote a blog on that. It'll save you a lot of time. If you have a lot of recurring transactions, you can just set those up to automatically pull into the appropriate chart of accounts so you don't even see them when they come through your bank feed. And all you have to do is that reconciliation at the end of the month.
Do you have a preferred technology?
Yeah, well, QuickBooks, hands down. Okay. That's the one we know, and the one we may be a little bit biased because that's the only one we use, but I'm sure all the others out there can do exactly what QuickBooks is doing, but QuickBooks does it really well. It's more user-friendly from what we found than the other ones, and there's more automation allowed. Like you can, like I was mentioning, the banking rules isn't something that I saw in Wave, and it is something that you can do in QuickBooks, and that will, I mean, it takes time up front, but it's definitely something that will save you time at the end once you have those rules set up.
Yeah. Wow. Interesting. I always learn so much on these podcasts. I'm interested in kind of FABC generally and how you help different advisors at different stages of their businesses. As you know, we have these different business phases that advisors work their way through, from preparing to implementing to building to scaling. Do your services change on where, based on where the advisors are in the business phases?
Yeah, well, we're pretty flexible as far as what we can provide an advisor depending on their business phase. Like if you're obviously an advisor that's starting a new RIA and say you have no clients, we have a service that's probably we would recommend you use rather than the monthly bookkeeping service because you don't necessarily have the revenue to substantiate more monthly expenses. We don't want to recommend bad business advice by spending another $100, $150 a month. We don't really have that revenue to support that. But we do support you in helping you get your chart of accounts and get your QuickBooks account set up. So that's our setup and training services for new firms. In that service, we'll show you like how to navigate QuickBooks, how to pull reports and connect your bank accounts, what it really means to be doing your bookkeeping. We'll go over how to categorize transactions and what the mapping looks like going from your bank account to your expense account or whatever chart of account you decide to use. From there, we'll show you if you use AdvicePay or if you have specific nuances to your books. If you use AdvicePay, for example, we'll show you how to record that appropriately because AdvicePay, you may have noticed, when the deposit comes in, it's net of the fee that you pay AdvicePay for that processing. We like to record the amount of the gross amount in the event that the 1099 that you receive shows the gross amount on there. So we're going to split that deposit to show $200 of gross income and a $2 bank charge or merchant deposit fee. We'll show you how to do all that so that you feel comfortable doing it. The other side of that is getting the sundry account set up. If you are doing asset management for your clients, as many XYPN members are, the custodian that you mostly use is TD Ameritrade. TD Ameritrade doesn't connect to the bank accounts feed in QuickBooks. It doesn't connect to any of the accounting softwares that we found. So you have to manually update that. We'll show you what that means to like go through the banking register in QuickBooks and manually add those deposits, manually make those transfers, and then add the interest income that you earn on those balances that are sitting in there.
Fascinating. Thanks, Dan.
Yeah.
Go ahead.
There was another sort of offering that we have for new firms, whether or not you decide to like use our setup and training service or just do the bookkeeping on your own. We do offer a year-end review service, and that's really for anyone, whether you're in the like fifth, eighth year of running your business, or really just starting your business out in your first year. It really gets an extra set of eyes on your books to make sure that the books are ready to go, accurate, usable for the end of the year for tax planning purposes. Do you need to make another estimated payment in January for the year end to make sure you don't have that payment penalty, or just make sure that everything is categorized appropriately? And that will sort of get you a little bit of coaching as well. You'll work with our senior accountant on that year-end review process. You'll get a sort of a one page with review notes, recommendations for how you should do some things differently, recommendations for changes, as well as a follow-up meeting to review that with the bookkeeper. And at that time, you can ask them any questions that you have about your bookkeeping, or why the reconciliations are off, or how to do reconciliations more quickly. You can use that time, sort of pick their brain and help develop better accounting practices.
Awesome. Dan, I'm wondering, and you've touched on it before, but say someone finds themselves in a bind. If they're being audited, what can they expect from you guys if they've come to you and they have an audit that is pending?
Yeah, so if they're already working with us on their books, that's one thing. We'll really just sort of be hands on deck to help them out. We're going to pull financial statements if they need them. We'll go and fix things as they need, and just making sure that they meet those deadlines for providing revised financials. Hopefully they by working with us, they don't have issues with their financial statements from the auditor in the first place. Like, hopefully they just get the check to go, keep moving forward, and have no issues come up. With that said, we do our best to operate and prepare things in accordance with what the state regulators say, but we found that sometimes that's hard because different regulators even in the same state sort of have different expectations, have different experiences with understanding accounting in general. So that's not always the case. But if you aren't working with us already, we're happy to try and help you out. I mean, the time frame is a little bit hard sometimes when you have to turn around revise financials in 10 days, 12 days. But I mean, we've had someone sign on just recently where they are going through their first regulatory audit, and they had a call with us before they got back the auditor's findings. And she said, hey, if we can figure out how to work together to get this done before the 23rd of November, when I have to provide revised financials, I'm happy to work with you guys in the future. So we're able to really expedite that process to be able to work with you all in the future, help you all out, make sure that you're not going to get deficiency notices, make sure that you're still able to run your business and keep things operating while you're going through that audit, because you don't want to leave your clients behind. You don't want to leave like unkept or unfinished projects behind where a client's going to wait on you and maybe go look for someone else in the event that you are taking too long to provide them something they're looking for. Just reach out, get some help on that. It's worth it.
Great advice. Dan, what's your take on outsourcing generally? I know some advisors get into this business because they want to be their own bosses. And so when we propose outsourcing, folks are like, no, I'm doing it on my own. Can you shine any light on the choice to outsource different aspects of businesses and why you would or would not recommend it?
Yeah, I mean, I think I'm a very numbers oriented person. So I look at it as like the time value of money there. Like, how much, if you were to charge someone for your time to help them develop a plan, or like hourly consulting, what would you charge? Is that $200 an hour? Is it $250? I think that's pretty much average for the XYPN network community. But if you think about how much time did your bookkeeping take you, if it's taking you like even a half an hour or an hour or two, like, is your time maybe better spent trying to get one more client? And then, like, if you pay $100, $150 for that bookkeeping for the month, if you get just one more client, that will really cover that cost and allow the peace of mind for you to not have to think about doing your bookkeeping. You'll just know it's getting done. You'll have the support on the back end if you go through a regulatory audit. I mean, outsourcing things in general, like, if you're not good at it, it probably, or if you don't want to do it, get it off your plate sooner than later. It's going to just cause anxiety if it's sitting there for 4 months and you say, I'm going to do it this month, I'm going to do it this week, I'm going to do it this time, I swear I'm going to like not delay doing this again. And if it just keeps happening, just get it off your plate. I promise it's going to make you feel better. You're not going to have to think about it on Friday when you're trying to go on a trip, or when you're thinking about what you can do for fun, like thinking like, man, maybe I should work this weekend to get my books caught back up. Like, that's not what you want to be doing. You started this business to be able to help clients, to be able to make an impact on their financial lives, not really starting it to do your bookkeeping, although that is definitely an essential part of running your business and being a CEO, being a CFO of your business.
Great advice. Great advice. Dan, as we round out this podcast, you've given such incredible advice to our listeners. I'm wondering, when they think about outsourcing, what are some of the tips that you have for them to consider?
Yeah, really consider the cost and consider sort of the expertise level of those that you are deciding to outsource to. Like if you think about outsourcing to you can go to any bookkeeper. There's bookkeeping businesses in every town in America, I'm sure, or around the world. You could go to them and they'll probably charge at an hourly rate, $25, $30 an hour, who knows what it is. But if they don't know what they're doing with your books and you operate in such a highly regulated environment, they could make mistakes that could cause you to have deficiency notices. I don't know what the cost benefit of that is for you, but you can sort of dig into that on your own. But if that mistake costs you the ability to run your business for a couple of months because they suspend your operations, was it worth paying $30 an hour, or was it worth paying $90 for a month of bookkeeping? Those are really some considerations there. The other thing is working with CPAs who understand this business as well is pretty important. We had a client specifically in California who was working with their local CPA. I think it was someone they had been using in their family for a couple of years. And that CPA, this was their first year in business, first off. That CPA hadn't worked with different RIAs before, didn't really understand the highly regulated environment that you all operate in. They made some adjustments when filing that tax return that caused that client to become deficient because they didn't meet the net worth requirement anymore. I can't remember specifically what they did, but they transferred funds from like a asset account to an equity account so that they were no longer meeting that net worth requirement. We had to reach out to the CPA after they got that deficiency notice, and the client reached out to us with that to sort of explain to them why that shouldn't have happened, why they need to keep these funds in that account so that they're not going deficient. Working with like XY Tax Solutions and us, we understand what these things are because this is the sole focus that we are in. This is our niche. Like Mike Kitsis talks about this all the time. You all have your niche. We have our niche as far as working with advisors, only working with RIAs or IARs on their businesses. Making sure that you outsource to the appropriate people is just as important as making sure that you're freeing up some of your time to be able to work on your business. Because if you do bring it to the wrong people, it might cause you a headache like in this specific example with the CPA causing them to get that deficiency notice.
Oh, what uncharted territory for so many folks as they go through their first rounds of needing to show their finances and talk to regulators and all that stuff. As we round out this episode, Dan, do you have any final words of wisdom when it comes to accounting for state registered RIAs? Any folks that may be hesitant around it? Any tips of advice that you'd like to end this podcast with?
Yeah, I mean, really leverage the resources that XYPN provides for you. FABC offers monthly office hours on the last Tuesday of every month. Sign up for those. It's on the XYPN members events calendar, I believe. But attending that, you can really just come with your questions. You can listen to others that have other questions. It may sort of spark something that you were thinking about but forgot to ask about, and maybe helps you consider some of the things that you should be doing. Aside from that, leverage our team for the year-end review service. I mean, we can help you sort of identify and fix problems relatively quickly within an hour or two of looking at your books. That will help you make sure that you're on the right path with bookkeeping and accounting going forward. One other sort of final tip is subscribe to our blog. We put out a lot of good content there on that blog. And not only do we do like diving into what is depreciation and amortization, how to pay yourself depending on the entity type that you choose, and really looking at those different entity types, for example. But we do some QuickBooks specific blogs where we show you tips and we talk about tricks that you can be doing, how to set up rules, how to split transactions. There's a lot of valuable information that you can get from there that might save you a bit of time if you are planning to do the bookkeeping on your own.
Great advice, Dan. Well, you have made accounting and bookkeeping way more fascinating for me, even someone who does know the space. And I hope that this energizes some of our listeners into really taking a proactive approach to their books as they enter into this space. Because as you've listed in this podcast, there's so many things that start with good books and records. And I think your advice is so valuable to all of our listeners. Dan, it's a total pleasure working with you. And it's been even more fun to have this podcast today. So thank you so much for all of your hard work and supporting advisors around the country.
Thank you, Maddie. It's been awesome being here with you.
Avocado toast, selfies, a mountain of student loan debt. Gen Y is anything but traditional, and with over 75 million people, it's a population you don't want to ignore. Learn more about how to serve this unique population in our guide called Attract and Profitably Serve Millennial Clients in Your RIA. Discover 3 key ways to tap into the millennial market and 6 things that they want from their financial advisor. Visit xyplanningnetwork.com/millennials for your free copy. Be sure to join our VIP community at xyplanningnetwork.com/VIP to hang out with other XYPN radio listeners, ask questions for future mailbag episodes, and finally, to find a community of like-minded financial advisors. Thank you so much for joining me today. We'll see you next time.
You are not alone and you are not crazy. It's scary starting, building, and growing your own financial planning firm, and that's why we put together a free private community just for you, the Cutting Edge Financial Planner. Go to xyplanningnetwork.com/VIP or text XYPN Radio to 33344 and join a network of thousands ready to change the lives of Gen X and Gen Y clients.